Well, welcome everybody, and thank you, Emily. We really appreciate you being here, and it has been an interesting journey with the whole PPP process. And now to have it potentially, it is extended, and have potentially people who have not been able to opt into the program earlier be able to do it is a great opportunity. So we're glad to see that there was response to this and that hopefully we can be really helpful. To start off, I'd love to do a poll just to get a kind of an idea of the audience and the rationales behind it. So Emily, if you don't mind, if we know that you are probably attending this because you haven't previously applied, love to have some feedback. Was it because the initial impact to your operations was minimal, or you expected to bounce back quickly, that there was uncertainty over that certification process, or just that you didn't have enough time and resources to do it? And I'll allow a couple more seconds here for everybody to get their responses in.
Just a few more seconds here.
Thank you so much for your responses. Okay, so a little bit all across the board, which makes sense. I mean, we have different rationales. I do think that some people were put off by the whole certification process, as well as the frenzy around the initial applications. There was such a rush to get the money, and a feeling of it running out, that it's interesting that it now has been updated a couple of times and the application date actually extended. So it's a good thing that you're having this opportunity, because obviously the plans with COVID and opening back up have not always gone according to optimistic views either. So we're going to continue on and weather through all of this together. A couple of general things just to say up front is Kate and I have seen the up and down nature of this, that it continues to change continually. It's been interesting the number of times we've been actually doing a webinar related to PPP and something new comes out, or at the last minute in prepping for a webinar, something changes. So just be aware of that. We know there's several areas that have not been cleared or clarified, and anticipate having some further direction on those. So while we're doing our best to give you information, it is subject to change or continual guidance and updating. Also, we're not lawyers, so this is not legal advice. And as you'll see as we go through this, there are so many things to consider and nuances for each individual business that we approach it from a high level general, but we're happy to answer individual questions because this may or may not answer all of those specifics. So we'll dive right into the whole idea here of applying. The whole reason the Act was initially passed and put into place was to address the needs of business owners because of the COVID restrictions on business, and to keep employment going. So that's the main intent, and hence the name Paycheck Protection Program. So it's designed ideally for that purpose. Now, to apply, mostly the big rules is this is the 3 bullet points directly from the SBA website, but in general, when you talk about size standards, we're referring to businesses that have fewer than 500 employees. Now, there are some exceptions, and there's some affiliation rules that have to be considered. But again, we're not going to go through all of those in detail unless there is a specific question. The other one that I want to be real upfront about is, because I have a passion and work primarily in the nonprofit side, is this is only for C3 organizations, not for other charitable, other C3s. C3 is the charitable. Other C businesses or nonprofits like associations or unions, etc. So just be aware of that. And this is not, and I know this question has come up in the questions that were submitted, as well as just some information I've gotten through emails and so forth. This is not for people who are already applied. I know some people in application, given the nature of doing the application so quickly and with the information that was there, have some thoughts of, I wish I could go back and do it differently because I probably would have calculated differently. Plus the fact that it was applying for the 2.5-month average, and maybe that wasn't sufficient. As of right now, this is only open to people who have not previously applied. I know there's some discussion whether that will gain any traction of allowing a second loan is unknown at this point. So at this point, that's the standards around that. Anything you wanted to add at that point, Kate, about applications or sizes?
I don't think so. I think you covered everything about who and what can apply.
Awesome. Now, the other big question was, where do I apply? And the initial guidance we gave here was working with your own lender, because obviously you have a relationship there and you're going to get the best probably answers and service. It has to go through an SBA lender, or as spelled out here, participating institution. Now, I've had a few questions that says, okay, my bank's not taking it anymore, or what do I do if my bank is in a list? There is a link here that goes to the SBA PDF of all participating lenders. And you will be getting, as Emily said, a copy of these slides so that you'll be able to use that hyperlink to go there and look for it. It's still best, obviously, to work with somebody that you have a relationship with, if possible. But even I'm finding that some of the people and institutions that are listed as participants are right now not taking applications. Keep in mind, the banks have been inundated through this process as well with a lot of different things, and some of them are struggling to keep up. When you consider that there have been almost, well, there's been over 4 million loans, probably close to 5 million at this point, that have actually been issued, you can appreciate the magnitude of what the banks have had to deal with in terms of just sheer volume and the original applications, and now trying to get prepared to take the applications for forgiveness, as well as extension of applying for funding. So talk to your bank is the best advice I can give you, and hopefully you can find somebody locally to work with. Now, the majority of banks we've worked with, you apply pretty much online. I'm not aware of any, unless Kate jumps in here with a difference, that are taking things in paper. It's an online kind of portal, and it's customized to their systems and their information. So while what we go through is a good guide and it provides the general information, the banks do have the ability to tweak it to their systems and their needs, as well as any additional requirements they may deem necessary to protect them as a financial institution. So those are all things to consider, and hopefully you'll have a better experience of trying to reach a bank than we did with the initial flurry. In the initial flurry, it was almost impossible to get a return phone call or get a response from a bank. So hopefully you will find that different. And there's plenty of participating banks, I believe, at this point, from what I've seen and experienced. But I know some are at a point right now where they're not, just because they're overwhelmed between all the situations. So what information do you need to apply? Well, primarily because this is paycheck protection, it's based on payroll costs. And the intent is to keep full employment so that obviously people are employed and the economy is protected. So what's included in payroll costs? Now, I'm going to give you some specifics here, but I want to, before I go dive too far into specifics on what is necessary here, take a step to the other end of the spectrum for forgiveness. While you don't have to consider anything other than payroll costs for the application, one of the things to factor in is that when it comes to forgiveness, you can have costs that are not payroll in specific categories that are eligible for forgiveness. But what I've been advising most of the people who got a loan the first time around is maximize out your payroll costs, because that's the intent, and it limits some of the extra questions or documentation and work that you have to do when applying for forgiveness. So just take all that into consideration as you're putting together these records and thinking through what you're going to include in payroll. Payroll includes anything that is gross compensation. So this includes employee withholdings. It includes tips, it includes commissions. It includes sick leave and vacation. It does not include those, though, if they were covered under that family's first act, because obviously those were already paid for with a separate funding source. But otherwise, any kinds of gross compensation are included. This also includes potentially, if you have been doing this or choose to, having an increase for hazard pay and potentially bonuses. Now, bonuses, be careful that you're not going outside of a normal procedure that might raise a red flag, but it does say that bonuses can be included in that compensation. What can't be included is if the compensation for any one individual exceeds $100,000 for the year, and if that employee's principal place of residence is not in the US. One other thing, just from my hat as not-for-profit, the other thing that can be included here in compensation is housing allowance for clergy. So there are a number of things that have been addressed through guidance and frequently asked questions that are not specifically spelled out in the compensation. Now, that's real generic. And there's some specifics we'll get to in a second here for different entity types.
Melody, we had a good question in the chat asking if leave and vacation include maternity leave, which there is not anything that says it's excluded. So I would say at this point, it would certainly be included as valid pay for the PPP, or if you were paying somebody on maternity leave last year and you're looking to calculate the cost of your payroll to apply, it would also be included in their gross wages. So it counts towards applying for the loan as well as funds you can use for forgiveness.
Excellent. Thank you for jumping in. Now, in addition to the payroll costs that are directly part of that payroll journal, there's some employer costs that can be included as well. And that is employer paid health insurance, their retirement contributions, and employer state and local taxes. Now notice that it's state and local. This specifically excludes the employer portion of FICA and Medicare. So not federal taxes, just state and local taxes. For a lot of organizations, that's going to be primarily your state unemployment insurance is what's included here. And there's a lot of questions around the other two in terms of what's included in retirement and health. In general, the guidance that we've taken in terms of health insurance is that it likely includes, obviously, health premiums, but dental and eye coverage. What's not included here is disability. That part's clear. Some of the other potential questions may or may not be quite as clear. There may be, some general consensus, but not specific guidance. Anything you want to add to either of those three, Kate? All right. Then I'm going to turn it over to Kate for a minute because she works more on things other than non-for-profit, unlike me, to talk about what that payroll looks like for different entities.
Sure. So it looked like we had a number of folks on the line that may be self-employed, which is great if you're thinking about applying for the PPP. You are eligible. If you're a partnership, you're eligible. If you have a Schedule C or a Schedule F, you're also eligible, but there are specific rules for calculating the amount of loan that you can apply for. So you want to make sure that you're very clear about what numbers you're going to be using doing that calculation to apply for the loan. We've got some entity specific instructions up on the screen now. So if you're a C corporation, so there are a couple of different factors that come into play here. If you are a C corporation or an S corporation and you are an owner of that business, you may also be getting a W-2. Most owners should be getting a W-2 if they're an employee of the business, in addition to potentially some draws, but you should be receiving a W-2. If you have a Schedule C or an F, so you're a sole proprietor, or you have a farm, or you're a partnership, you either will be getting nothing besides filing the Schedule C or the Schedule F on your 1040, or if you're a general partner in a partnership, you would be receiving a K1. So you want to make sure that you're pulling the right information when calculating the amount of the loan. There are a few different factors that come into play. If you are self-employed with no employees, you're only going to be able to use the information that's related to you as the owner. If you have employees, you'll be able to factor in your owner compensation plus any expenses that you have to fund your payroll. So we can take a look through here. So for a C corporation, again, if you're an owner, you're going to be looking at your 2019 employee cash compensation and the employer contributions to your retirement and health insurance. So all of those will factor into the amount of loan that you can receive. So you're going to take your 2019 employee cash compensation plus those employer paid retirement and health insurance contributions, and you're going to basically get an average of what your cash compensation is for 2019, and you're going to multiply it by 2.5. So in talking about the amount of loan you can apply for, even if you're brand new to the program and obviously you're applying for the first time, even though that covered period that you can use the funds has been extended, you actually aren't going to be able to apply for any more than you would have been able to in the original round of applications. It's still going to be that average 2019 payroll times 2.5. So it's still intending to fund about 8 weeks worth of payroll, plus give you an allocation to be able to use for some of those non-payroll costs. So be thinking about that as well. For an S corporation, again, if you're an owner, you're going to be looking at your 2019 employee cash compensation plus employer paid retirement contributions. Employer paid health insurance is not included as an additional payroll cost to use for the calculation because it's actually already included in your gross salary. So that's an important distinction to make when you're putting your information together and you're going to apply. Again, if you have employees, you'll also be able to add the cost of your payroll. So you'll be factoring in your payroll for your employees plus your owner employee compensation package. If you're a self-employed and you file using a Schedule C or a Schedule F, essentially you're going to be looking at your owner compensation replacement based on your 2019 net profit. So this is an important factor to note. If you are a Schedule C or a Schedule F filer and you have no employees and you did not have a net profit in 2019, so you either broke even or you had a net loss, you are not eligible to apply for a PPP loan. So you had to have had some sort of profit if you didn't have any employees. That's going to be the only way that you'll be able to actually apply for a PPP loan. So you're going to need your Schedule C or your Schedule F that you filed for 2019. Obviously, today is tax day. Happy tax day to everybody. It's pretty surreal to be saying that. But it is tax day. So if you aren't filing today, if you're on extension as of today, you still need to have basically a mock version of your Schedule C or Schedule F completed so that you can apply for the PPP loan. And you'll want to be very careful because you're going to want to make sure that whatever you do file is essentially the same as what your mock Schedule C or Schedule F is when you apply for the loan. That's going to be one of the factors that they look at when you apply for forgiveness. They're going to be looking at what you filed for 2019 because that's how your owner compensation replacement is going to be calculated. For general partners in a partnership, so perhaps you have an LLC or an LLP, you'll be looking at your 2019 K1. You'll be looking at your net earnings from self-employment, reduced by a few options listed on the slide here. So again, if you're a partner in a partnership, you're not receiving a W-2, you're typically only receiving a K1. So you are eligible, again, to receive as long as there were net earnings. If there was a net loss, you're not going to be able to apply. And another note about partners, there were some rulings that came out that stipulated that individual partners are not eligible to apply on their own. They must apply under the partnership employer identification number. So if you're a partner in a partnership, just know that you aren't able to apply for your own individual PPP loan. The partnership itself has to apply, and you're going to take into consideration each of the partners' net earnings to be able to calculate what your PPP loan amount will be.
Awesome. Thank you so much, Kate, for all that detail. That's really good. And it is important to note, I really appreciated you adding to that, just because the extension came into place did not change really any of the rules for applying or the time frame. So it's still the 2.5 month time average payroll. So that has changed despite all of the other things that have changed along the way. So basic form we'll go through here just to make sure that if you have questions as you see something. The form has improved a little bit from its very first iterations. You do have more options up in the check one box to identify yourself as the different types of eligible business entities. The one thing, again, here comes my nonprofit hat, is the form still does tend towards ownership. So when you see ownership, if you're a not-for-profit, take that as an authorized signer, and that's going to be the person who is then doing the certifications and application process that would otherwise be termed owner. You apply under your EIN. There was one question that came in with registrations about shared employees. That's going to be a case by case depending on how the payroll is set up and who's paying, and if it's a direct payment for employee or under that EIN. So that's one of those I'd rather address individually with somebody. The thing to note is that this does not include independent contractors, or if you're doing payroll for somebody else, those employees potentially that you are providing as a service. Now, if you use an professional employment organization, you are allowed to use that as your employees. But again, you may want to talk or send me an email and we can talk through specifics on that. But one of the initial confusions was that independent contractor issue. And as we saw in the prior slide and in the check box at the top, independent contractors apply on their own. So you cannot include those in your organization's payroll. You're going to take that average monthly payroll. So you're going to take everything for 2019 and multiply it by 2 times 5. That 2.5 month period is what they're using as the applicable loan amount. Now you'll notice right on the form it says plus EIDL, which is the other primary SBA program that you could apply for. If you applied for and received EIDL funding, then obviously you need to follow the instructions here and add that in, net of the advance you got on that loan, if applicable. Okay. Now, number of employees is just what it says, the number of employees at the date of application. We're not getting into FTE calculations or anything else at the moment. It's strict head count. And then the purpose of the loan, you notice the 3 main areas of expenditures that can be forgiven down the road. I'm not sure why there's an other box here. Any thoughts on that, Kate? I never asked you that, but I've been curious about why there's an other box.
I don't really have an answer for that, considering that you can't use it for anything besides any of those items. So I'm not sure why they.
Somebody
That's a good
just said
question.
just in case.
Yeah.
Because as to Kate's point, there's only these costs you can use even if you're in the loan situation versus a forgiveness situation. Only payroll, mortgage interest, lease expenses, and utilities are eligible expenses, period. So not sure about the other, but that's where it is. Now, under the new, and we'll get to this in a second too, you do have a little bit more of the amount allocated to things other than payroll, but it's up to you how you ultimately use it. As long as you meet at least 60% of the funds being used for payroll, you're eligible for full forgiveness. But like I said, you may want to strategize how to maximize its usage in those categories and minimize potentially some of the record keeping and documentation that you have to do.
Melody, we had one question in the Q&A that relates back to the first part of the application, if we want to go back to the slide real quick. So somebody was asking, would independent contractors filling out this form say 0 or 1 for the number of employees? So I would go ahead and put just yourself, so you can put 1 so that they know that you do have somebody that's quote unquote on payroll. I wouldn't put 0, so I would go ahead and put 1.
That's a great question, because it's a really, even back to what you were talking about with some of those other entity types, if you're the only person, you're a sole proprietor, just 1, that makes sense.
Yeah.
The next part is ownership. And this is the way the form reads, is to include names of owners over 20% or more. Again, for nonprofits, you don't have ownership. So this is going to be the information for your applicable authorized signer. Now, there has been some debate and questions over the ownership, especially for some of our co-op industry and practice. Any updates that you want to give there, Kate, or just go with the straight 20%?
So for, if we have any co-ops on the phone, I know I've answered a lot of questions for a lot of our co-op clients and non-clients. And at this point, if you do have owners that own more than 20%, certainly list all of them here. For co-ops, more often than not, they're going to have many, many owners with less than 20% ownership interest. And in that instance, essentially what they're looking for here is for somebody that is able to make the certifications. So if you are a co-op, you should have a board. You probably have some sort of general manager or your board chair who would be able to probably, per the bylaws, make certifications as it relates to applying for this or any type of loan. So that's the person that you'll want to have listed there. But they don't need to list out all, some co-ops have 5, members, but they all own less than 1%. So you certainly don't need to list all of that. But if you do have multiple owners that own more than 20%, certainly include their information here. If you don't have anybody that owns more than 20%, you should have somebody that's tasked with leadership and per the bylaws or per the board directive can make the certifications on this application.
Awesome, thank you for that. Yeah, there are some nuances that we've run into throughout that are not specifically addressed on the form. So we're trying our best to provide all the information that you might need or answer the questions that you may have as you dig into this. So the first part of the application, or the first part of questions related to the application are questions here 1 through 4. If you answer yes, as it states, to 1 or 2, then you cannot even apply because you're not going to be approved. Basically being that the applicant is debarred or has voluntarily excluded from participation, bankruptcy, so some of those legal requirements would preclude you from participation. The second one is related to delinquency or default. And again, that precludes you from participation. So if those apply, then it's not in your interest, obviously, to even start the application because you are not eligible for the loan. Question 3 is about common management with others. This gets back to affiliation rules. And again, I'm not that expert on that, but SBA does have specific affiliation rules, and Kate's great at that if you have questions, or you can send them to me and I will make sure that I find the right person to get the answer for you if Kate's not available. So that's what that one's getting to. And then question 4 is back to what we had earlier in the application about the EIDL loan, the Economic Injury Disaster Loan, and whether or not you received funding from that. And because they are looking at rolling in the Economic Disaster Loan into the PPP and or limiting forgiveness, that's the reason for these questions. And a lot of it has to do with the timing and what you received. Questions 5 through 8 then are at the bottom of that first page. And again, there's 2 questions here that will preclude you from even participating in the program. So it's good to know up front whether or not they apply, and therefore whether or not you should even apply. So the first is that any individual that has more than a 20% ownership is either currently incarcerated or has a felony on their record, and then you have to initial the specific response there. The question 6 is similar, but relating specifically to fraud, bribery, embezzlement, and making false statements. I think those are pretty self-explanatory as to why the banks and the SBA want to protect themselves in situations like that, so we won't delve any deeper into those. Question 7 gets back to one of the things we mentioned earlier with payroll. The payroll that you're including has to be for employees whose principal place of residence is in the US. So that's an important criteria and a requirement of the payroll. And whether or not you're a franchise that's listed in the franchise directory is the last question. Then we get to the certifications. And it is important that the people who are responsible for making the decisions, and to Kate's point, you know, whoever that is, depending on the type of organization, that they are all, even if you're not the one ultimately signing this, those individuals are aware of the application and the certification process, because you are agreeing and certifying, as the title says, to these statements. So you've read and understand what's going on here, and that you're eligible for the loan. And it lists then obviously the criteria that you're one of those applicants that meets one of the 3 criteria we talked about at the very beginning. It's not for illegal activity. Obviously, that's, again, hopefully fairly self-evident. And then some of these are obviously things like the third from the bottom there, purchase only American-made products to the extent feasible. Obviously, the intent, again, of this law was, in the funding, is to provide for employment and to bolster our economy. So some of that is all related, obviously, to the intent of the funding. Additional certifications that you have to make by actually initialing each one then are below that first criteria or first grouping of certifications. The first certification is that the application or applicant was in operations at February 15th. That February 15th you'll see is kind of a line in the sand throughout a number of these certifications, as well as ultimately comes back later on in terms of forgiveness, as that's kind of the, if you will, the pre versus post-COVID date, is that February 15th is the line that they've drawn regarding that. The one that has been highly debated, and you probably heard in the news, is the second one. Current economic uncertainty makes this loan request necessary. General guidance there is that economic uncertainty was intentionally left as a vague statement because there's so many unknowns here that it's hard to make a set criteria or a common judgment. So you do have to use your own judgment in making this certification. For the most part, most people, unless you have other resources that are easily available or you have a huge savings or reserve account, for a lot of people, that economic uncertainty and the given condition that the pandemic has gone on longer, stay-at-home orders have, come and gone and been replaced. That's all uncertainty enough for most organizations to be able to make this certification. Now, you may have also heard in the news around this certification that when there was such panic over it, it came out that only loans over 2 million would be audited for this. Those are a given, but the SBA does retain the right to audit any loan for compliance as well as this particular certification. So don't make the certification lightly, but don't panic over it either, because it's not like if you're entering this with good faith and good intention, you're fine with that certification. Third one is obviously, like we've talked about, the intent of the law here to retain workers and maintain payroll, as well as those other non-payroll costs that are part of the applicable forgiveness. That you're going to provide documentation on the number of full-time equivalents, as well as the dollar amounts. So there is documentation that's submitted with the application for funding, as well as for ultimately the loan forgiveness. Understanding that loan forgiveness is provided on the documentation that is applied later on with the forgiveness application, and that no more than 40% can be for non-payroll. And here's where I was working with another organization the other day where they had a lot of questions around leases and utilities, etc. And I'm happy to answer those questions, but given now that your covered period can be more than 8 weeks, you can maximize out the funds by putting it towards payroll and limit some of the questions and or research and additional documentation that you may have to do just by putting it to those costs and going for a slightly longer covered period. So again, personal choices, but I do recommend considering what you're going to use there and the amount of work that it's going to require. You're certifying that you understand the forgiveness will be provided based on what we talked about, and you have to submit the forgiveness application no later than 10 months after the end of the covered period. Certifying the information provided is obviously true and accurate, and that the lender has the right to confirm information. So some of this is standard loan kind of certification and information as well. Any questions come in, Kate, on certifications or anything you want to add?
Nothing on the certifications. There are a few questions, but I think they'll probably be best for the end when we talk about a few other things. So.
Awesome. So that's the extent really of applying. And other than getting your 2019 payroll records together and figuring out that 2.5 month average, the application process isn't too cumbersome and isn't too difficult. Now the forgiveness piece is still being processed, and I don't know, maybe I should reserve any commentary on the forgiveness piece. But like I said, once the flexibility, the Paycheck Protection Flexibility Act was passed, it allowed for a lot more flexibility in utilizing these funds and made it a lot easier to use 100% of the funds for forgivable purposes. So it's not as stressful, and my biggest word of advice is take a deep breath, do it in good faith, ask the questions, but now you're not going to have to nitpick, try to get costs in there in an 8-week window, because you do have more flexibility on applying for a broader forgiveness period. The key with forgiveness, and it can never start soon enough, is the documentation around a lot of these things. So you need to document what you're certifying in the initial application for funding, but you're also going to have to document things for forgiveness. And when it comes to the forgiveness side, there's documentation you don't have to submit, but you have to retain for 6 years. So keep in mind that as you're applying for this, documentation and keeping track is going to be a very important part of making sure that you comply and that you get the full forgiveness that you're eligible for. The basic forgiveness terms now with the Flexibility Act are that the interest rate did not change. If the funding goes to a loan, it's at an interest rate of 1%. With the flexibility in time frame and the extension, chances are you're not going to have a loan element here, that most people are working and applying towards this to have it fully forgiven. So keep that in mind, but that is the interest rate if it did apply. Loans issued prior to June 5th is a moot point, obviously here if you haven't applied at all. But those loans originally had a maturity of 2 years, and to change the maturity on those loans previously issued, you have to renegotiate with the lender. Loans under applications that you'd be doing now automatically have a maturity of 5 years. So again, one of the biggest things is it provided everybody an opportunity to take a deep breath and not have this frenzy of everything has to be now, now, now kind of thing. So we've all been able to take a step back and have sufficient time to plan accordingly and make sure that we're doing this correctly. The forgiveness applications, like I said, has to be submitted within 10 months after the end of the covered period. What that can mean though is because the covered period can now be up to 24 weeks, you potentially could be applying for forgiveness in 2021. So there's considerable flexibility and time frame again there. Two thoughts come to mind on that. One is that it's not a panic situation, but the second is for those who are prone to procrastination, you also have to be aware that this doesn't become a matter of procrastinating either, because with that extended period, it would be real easy to continue putting it on the back burner. And I do think it's something that should be addressed sooner rather than later so that you make sure all the documentation is there and you don't have any scramble at the last minute. There is no personal guarantees that are required here, and there are no fees to apply. That is all part of the terms of this particular funding. So like we said, identify the lender that is taking applications and work with them, because there's nothing preventing you from those. Now, I put a couple of things in here about FTEs just because this is a common language that you see throughout things related to PPP. And I don't want to go too far on the forgiveness side, but I do want you to be aware of what could impair 100% forgiveness. And the two primary things that may reduce forgiveness from 100% is if you don't do what it was intended to, of spending at least 60% on payroll, you don't maintain, with some exceptions, your FTE levels, and you reduce wages by more than 25%. So those are kind of the key things to keep in mind here as you're planning to use the funds, is those are things that could impair getting the 100% forgiveness. Now, an FTE is based on the hours worked. So it's strictly like it shows here on the slide, the calculation. If it's a 30-hour average, you're a 0.8 FTE. I know some organizations consider full-time to be less than 40 hours, and I've had that question come up. It doesn't matter for purposes here. You can't say 37 hours, for instance, is full-time and is a 1, because it's clearly defined as 40 hours or more is a 1. So what I recommend in those cases is, rather than using the alternative method, go ahead and do the calculation under the bullet point 2 here. And your calculations are going to be comparing apples to apples in terms of your reference period and your PPP covered period. So it doesn't matter really if full-time is different than 40 hours for you, because you're gonna have the same FTE calculation in both circumstances. Now, there is an alternative calculation that's allowed if you choose to do it rather than figuring out averages, and that's what that last bullet point is there. There are a number of things that have come out in this process about, well, what happens if? Does this affect my FTE? So as part of the ongoing guidance and clarifications, there's been a number of situations that have been clearly spelled out as not impacting or reducing your FTE count. The one that doesn't have any relief is that payroll number. So if you're going to have to, let off some of your workforce, or you cannot be at 100% workforce for a variety of reasons, I recommend not changing their annual salary or their hourly rate. Adjust their hours instead, and then look to the FTE reduction exceptions and safe harbors, because that's probably going to offer you the best potential ways to make sure you get 100% forgiveness. Some of these things, again, key here with all of these is documentation. Kate and I laugh because as accountants, that's one of our favorite words, as documentation. So you have to have documentation that, for instance, you made a good faith offer to rehire or restore hours for an employee and they chose not to come back. We saw that happening for various reasons, personal or economic reasons. And as long as the employer made the good faith offer and the employee declined, that is not seen as an FTE reduction. It's also not a reduction if the employee was terminated for cause. Again, documentation of that cause is a really important piece there. If employees, because a lot of things have changed obviously for individuals during this time, if they choose to voluntarily resign, retire, or receive less hours, those all are also not going to impact the FTE count. But again, you need to have and make sure that you have adequate documentation around those. Now, the other thing that I didn't include here in the slides is there are a couple of safe harbors around the FTE. And the big thing there is restoring FTEs to full count by December 31st, or having the documentation to support that you couldn't return to full business because of orders limiting capacity of operations or limiting things for safety concerns. So again, don't sweat all of that stuff up front, but it's good to know enough to be able to plan adequately and understand how you can structure this to maximize your forgiveness, because that's the goal, is to maximize that piece of it. Now, one of the other things that I didn't include here is if you get the funding, it is still considered a loan. So when you get the original funding, you should be recording it as a liability. Recording after that is another issue, and you have a couple of options. And I'm happy to answer those questions, but I don't want to go too far muddy the waters beyond the application process. But initially it is recorded as a loan. So you record it as that liability. Anything else you want to add before we go to questions, Kate?
Nope, just to back up your documentation. It's really important, and you may not actually need to submit all of this documentation when you either apply for the application or apply for forgiveness. But like we said, even if your loan is under $2 million, that doesn't absolve you of the possibility of being audited either by the SBA or by the IRS or a state or local. So you need to make sure that you have all of these things on file and ready to go if anybody ever comes back and asks those questions. So the more, the better.
Exactly. So, other questions that came in, Kate, that we should address?
There are a few. Are we through the material on the slides at this point, Melanie?
Yeah, I provide, as Emily said, you'll get these slides. Here's a few more resources.
Okay.
I've been doing work throughout this, so we have a fairly extensive resource center, as well as a couple other things. And then the very last slide in here has both Kate and my contact information, so that in addition to the Q&A that we will respond to, if you have a question, you can reach out to one of us.
So we do have a few questions that I think would be great for anybody that's on the meeting today. So one question came in early, was asking about if they needed a business account for the money to be deposited to, if they're an independent contractor. So you don't necessarily need a business account. I don't think that they're going to verify that you have one. You should, if you're a business owner and you have a business, you should, it's best practice to have a separate business account. We do recommend as a best practice for anybody receiving a PPP loan that you open up a separate account, a separate bank account to deposit the funds in. This way, it's going to be really easy for you to track how you're using the funds. You can simply transfer the funds from your PPP account into your general operating account to cover payroll, to cover rent, to cover utilities. It just makes it so that you have a bank statement for your PPP account and you can match every transfer of money to your general operating account into you can match every transfer, excuse me, to some sort of backup documentation. But you don't technically have to have a business account that I'm aware of. You just need to provide them with bank information to deposit the money.
One thing I would add to that is again, back to, it's up to individual lenders and banks. Some may require it just for their own internal purposes or whatever rationale internally, but it's not an SBA requirement. It may be a bank requirement.
Another question was about the deadline dates for PPP, which I don't know if we actually mentioned what the final date to apply is. So we're talking about all these extensions and then forgot to mention what the extended date was. So originally you had until June 30th to apply for the PPP loan program. And on July 1st, they extended that to August 8th. So you have less than a month, about 3 or 4 weeks left to apply for the PPP loan. And you have through December 31st, essentially, to use the funds at this point. That will, the 24-week covered period would go beyond that December 31st, but the likelihood is that you won't actually be able to utilize the funds over the entire 24 weeks because you're still, again, only receiving 2.5 times your average monthly 2019 payroll. So another question about how does the 60% payroll work if you are self-employed and don't have employees on a payroll? So it sounds like maybe we just need to kind of clarify some of the guidance a little bit. So to be eligible for the maximum loan forgiveness, which would be having the entire loan forgiven, one of the requirements is that you need to use the PPP funds, at least 60% of the PPP loan on eligible payroll costs. So that's gross salary, the employer paid state and local taxes, employer contributions to health insurance and retirement contributions. So if you're self-employed and you don't have any employees on payroll, you're going to be looking again at that calculation. If you're a Schedule C filer, you're going to be looking at your 2019 net profit. Again, you have to have a net profit to be able to qualify for the PPP loan in 2019. If you're the only employee, if you're the owner and have no employees. So you're going to be able to apply for 2.5 times your average monthly net profit from 2019. And that's what you're going to be able to pay yourself. With the expansion to a 24-week covered period, you as an owner employee are now able to pay yourself 2.5 of 12 months worth of your 2019 payroll. So essentially, you'll be able to pay yourself the entire amount of the loan that you apply for. So they did expand that when they changed it to 24 weeks. So it's going to make it really easy for you to apply for maximum forgiveness, because essentially you're just covering 10 weeks worth of your 2019 owner compensation. So you shouldn't have to necessarily worry about the 60%, using at least 60% on payroll, because what you're applying for will cover your owner compensation for a 10-week, 2.5-month period. So hopefully that answers that question.
One of the things I want to jump in here, because it reminded me of a question that came in earlier and I didn't address, is when you're doing that payroll, does the person have to be working? No, you can pay for people to be idle. Some of the funding was used to keep people on payroll even though they were unable to work because of shutdowns or other circumstances. So to Kate's point, it doesn't preclude you from having that payroll if you're not able to have the full employment in terms of hours or capabilities in the workplace.
The other questions that we have are actually questions about EIDL versus PPP. So maybe we could dive into that just a little bit. So an easy question, can you apply for both EIDL and PPP? The short answer is yes, you certainly can. Key, if you get both, you do have to ensure that you're using them for different things if you have both sets of funding at the same time. So the PPP is pretty strict about what you can and can't use the funds for. So you have eligible payroll costs and the eligible non-payroll costs, which are just rent, mortgage interest, and utilities. So the PPP is intended for a strict set of expenses that you may have. The EIDL is strictly a loan. There is no forgivable portion. It is a loan if you're a nonprofit. It's repayable at a 2.75% interest rate, and for for-profit businesses, it's at 3.75%. So incredibly low interest loans. They are up to $150,000, so that's the maximum. The amount of loan that you actually receive will be based on information that you provide to an SBA loan officer. So you don't actually get to determine. You can request up to the maximum of $150,000, but that's not guaranteed that you're going to get that much money. Basically, they're going to determine what your economic need is for the money for a loan. You may have heard about the EIDL grant advance program. I mentioned that as of, I think, yesterday or the beginning of this week, that grant money has run out. So if you apply for an EIDL now, you won't be eligible to receive that up to $10,000 grant amount. So you'll only be applying for the actual loan itself. Again, you can apply for both. The EIDL loan does not have quite strict governance over what you can and can't spend it on. It is a working capital loan. So things that they don't advise that you spend it on, if you're looking to make a large capital purchase, that's really not what the loan was intended for. If you're looking to, pay off a line of credits, that's not really what the loan was intended for. However, it's not going to be subject to as intense a scrutiny as the PPP is potentially going to be, again, because it's not, there's no forgivable portion. It is strictly a loan. You'll have to pay it back. And the terms of the EIDL loan can be up to 30-year repayment terms. So a pretty advantageous route to go. Another item to note with the EIDL is that if you are looking for a loan over $25,000, you do have to have collateral. Look to real estate if you have it. If you don't, you have to come up with other collateral to cover any amount of the loan over $25,000. It's $25,000 or less, there's no collateral needed. So that is another factor that plays a role for a lot of organizations.
One other thing I would add to everything you said there, Kate, is the EIDL is administered directly by the SBA. So you apply directly on their site versus the PPP that is using local lending institutions and banks. So that's one other difference there between those. And as I'm looking back through a few of the questions, one of the other things that I didn't clearly state up front that I want to make sure I get added in there, in addition to being able to apply through August 8th, when does your covered period start? Well, it starts the date you receive funds in your bank account. So if you apply today and on July 20th, you have banks or amounts deposited from the bank for PPP into your account, your period starts July 20th. So.
Yep, and that's that actually answers one of the questions in our chat. So you once that covered period starts, that's when you'll be able to cover if you're using for rent or utilities. It's only going to be rent or utilities paid or incurred within that covered period. So your covered period again would start the day that funds are dispersed into your account. And then you have 24 weeks from that date to use the funds. And any expenses you incur in that 24 weeks are eligible for you to use the PPP funds for, as it relates to payroll, rent, and utilities. So you can't retroactively go back and cover utilities for the months prior to receiving the PPP loan.
One other important thing, because I didn't emphasize the non-payroll things in the presentation, the intent is primarily that, and there's more flexibility now with the longer period, is that if you do intend to use the mortgage and trust or the lease options, it has to be for agreements or loans that were in place as of, again, that date in the sand, February 15th.
Yep. Yeah, so it can't be, if you just started renting a space a month ago, that would not end up being an eligible cost. If you just signed up with a new telephone provider, that would not end up being eligible because it had to have been an agreement or service that was in place as of February 15th. So one other question about EIDL and PPP. So do we have any advice about whether to apply for EIDL this month? And if so, applying before or after PPP? I can speak to that a little bit. So the EIDL program had its share of backups and delays and mishaps, similar to the PPP, but the PPP hit the ground running and people jumped on board with that. So the SBA kind of had to focus entirely on the PPP, and so the EIDL loan program got pretty backed up. I would say that if you are interested in applying for either or both, I would do it sooner rather than later. It's not really going to matter too much which one you do first or second. If you do end up applying for and getting the EIDL loan prior to being approved for and receiving a PPP loan, just make a note that on that application, again, if you applied for an EIDL loan today and you got it tomorrow, which is very unlikely, that's the timing of everything is going to be unlikely that this would happen. But if you got an EIDL loan tomorrow, and then you wanted to apply for the PPP loan on Friday, just remember that you do have to take into account your EIDL loan on the application. You just have to make sure that that's included. Essentially, what you end up doing is you are refinancing your EIDL loan into the PPP loan. So there could be some advantageous reasons to do that. However, with the fact that you only have a few weeks left to apply for the PPP, and the EIDL is still pretty backed up. They're still approving applications that were submitted probably in April and May. So they're really, it is a first come, first serve basis for both programs. So the EIDL is still working through loans that were, applications that were submitted months ago at this point. So the likelihood that you would get through the EIDL process before you got through the PPP process, I would say is probably not very likely. But in the case of the EIDL loan, you do not need to take the loan. So if you apply and you get approved to go on to the next round of processing, decide that things are looking okay, or you just don't want to have if you just don't want to take on a loan, you can turn down the idle loan. There are no penalties to do that. All you have to do is just reject the loan. There are no penalties, no fees associated with not taking the loan. So it doesn't really hurt to apply for it. It can be there as a backup. You have a certain amount of time. I think it's 30 days. I haven't looked at that in a little while for the idle. You have a certain amount of time that you can say that you would like to apply for an amount, but you don't need to accept the idle loan. The last question that's in the Q&A is a specific question, but since we've got a little time, figured we can go through and answer that.
Sure.
So in 2019, we had 7 employees. As of March 1st of this year, they had 5 employees and 4 employees at the end of March 31st. None of that was due to COVID. Is there any reason that we should consider applying for PPP? We are receiving regular offerings and have no difficulty meeting payroll. What are your thoughts on that, Melody?
I've had the question come up with the reduction in employees that is not COVID related and kind of used as an opportunity for restructuring. And I'd be interested in your perspective on this as well, Kate. Is to me then, if it's a voluntary resignation or a for-cause termination and it's not replaced, you probably can apply one of the exceptions, but again, be very clear and document it, because the expectation is, for the most part, that you're going to advertise to replace that position. So if not, there needs to be pretty strong rationale and documentation for not. In terms of the other piece for uncertainty, boy, that's a hard judgment call. I mean, it's so hard to know. A lot of us expected by this point in the summer to be back to being able to do some of our normal, quote, normal activities and not having the level of restrictions. So that still puts a fair amount of uncertainty there. That's a hard one to make somebody else's choice for, but I would certainly say even while you're okay today, there's still a lot of uncertainty on the horizon.
Yeah, it's really going to be about whether you feel comfortable making the certification on the application that you feel you have a need for the funds. You know, if it's going to be a small loan, what is the likelihood that you're going to get audited, and what are the questions that are going to be asked? We don't really have answers to those questions, so that's really a management decision. But just know that you know, you do have to put some thought into making those certifications, because as we saw in the news, that kind of came out as a big deal, mostly for those you know, public companies that had access to other capital, franchises that were getting large loans. Those were certainly open to a little bit more scrutiny than a smaller organization will. But it's going to come down to whoever is making those certifications, what your comfort level is in putting your initials and putting your signature on it. And just knowing that somebody could come back and ask for some sort of situation.
The thing though that my understanding is that it doesn't mean you have to be in dire straits today.
Right.
As in the given coming period, there is enough uncertainty. So I had one organization in the first round that had a savings account, but they also knew they had to cancel their annual conference, and they were looking at potential 6- and 7-figure kind of penalties. And so that was a fair uncertainty that was going to use up those savings. So again, it's a personal certification, but it's not one that is a line in the sand and clear cut, and it doesn't have to be today I'm in dire circumstances.
Right. Absolutely.
Wonderful.
That,
well,
I think, yeah, that answers all the questions in the chat.
Awesome. We allowed for additional time because we've been running out. I'm glad that we could answer the questions and get through the information.
Awesome. Well, thank you so much for everybody spending time with us today. We so appreciate it. We so appreciate our two presenters and all of your expertise. If you do have any follow-up questions, Kate and Melody's contact information is right here on the screen, and you will be receiving a recording of this presentation along with the slide deck. So there's lots of different ways to get in touch with us. Melody or Kate, any last words before we go?
The only thing, one last question came in. Somebody was asking that they couldn't find the easy form. I think we have on our resources a link to the SBA website. Otherwise, the SBA.gov website has everything that you could need, including links to both the standard and easy form. Those are the forgiveness applications. Also, just to stress, there is an easy form when it comes to forgiveness application. If you're just applying for the loan, there's only one application, and you're going to want to touch base with your banker. Because I think Melody discussed at the beginning, most banks have an online portal to be able to apply. So you're going to want to be in touch with them and fill out whatever they're using to be able to apply for the loan. But if you are looking for the standard or easy form for forgiveness, you can find those on the SBA.gov website.
The other thing that came to mind here as we were talking is when you're in contact with your banker, make sure that you're clear that you're making an initial application for PPP funding, because right now they're being inundated, obviously, with questions around forgiveness. So just make it clear for them so that they're answering your questions correctly.
And I know a comment was made that, and I have heard this from a couple of other clients, that Summit Credit Union is obviously a pretty big bank here in Wisconsin, if you're in Wisconsin, and they are not taking applications anymore. So if you do see them on the participating list on the SBA's website, know that that list, I don't think is necessarily being updated in exactly real time, just because it's such a large list. So if your bank is listed, reach out to them. If they let you know that they aren't taking applications anymore, go back to the list and see what you can find if there are other institutions that are taking applications, because there should still be a fair amount, and any that are still taking applications are likely pretty open to starting new relationships with new clients. So they may just ask that you open up a small account before you apply for the loan with their bank. But there are still lenders out there that are taking applications. So.
Perfect. Well, thank you so much. And thank you all again. Thanks, ladies. Have a wonderful rest of your day, everybody.
Thanks.
Thank you.
Bye.
Bye.